Hey, this is Matt from InvestiQuant. Today is Monday, November 29, 2021. Friday, the markets sold off in the shortened trading session, closing down near the lows of the session and closing below the lower Bollinger Band. So we kind of had giant selling coming out of nowhere on some news of a new coronavirus variant, and that got the market spooked and selling. So what we're going to be looking at this morning is what has happened historically when you gap up following a close below that lower Bollinger Band, which is kind of an oversold like signal. So let me go ahead and set this up. I've got all four instruments selected here. Setup will be based upon entering the market long at 9:30 a.m. Eastern time. We are currently trading higher in the overnight session. So I'm going to add gap up to the gap direction here. And then I'm going to hop down to the indicators library. I'm going to say that yesterday closed below the lower Bollinger Band. So I'm going to hit equals here. And then I'm going to say we closed below a 10-day simple moving average, but above a 200-day simple moving average. So that will add everything that I want for this test. And now I can click view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern time, exiting at 4:15 p.m. Eastern time. When you gap up in the prior day was a day that closed below the lower Bollinger Band and below a 10-day simple moving average, but above a 200-day simple moving average. Historically, we've got 90 samples in the S&P dating back to 2003. There's 89 in the NASDAQ, 78 in the Dow, 95 in the Russell. The win rates on these all slightly favored. S&P the strongest of the group, coming in at 59% of these, closing above the opening print for the day. For the NASDAQ, it's 57%. For the Dow, it is 54%. And for the Russell, 57%. So all of those fairly similar win rates there, just in the mid to upper 50s. If we look at the average moves, the average win is larger than the average loss for the S&P. That is also the case for the NASDAQ. For the Dow, the average loss is just a little bit larger, and for the Russell, they are almost identical in size. So 2 of the 4 have larger average wins. All of them have slightly favored win rates. The win rates really are not super impressive. They are all just mildly favored there, but average win is larger than the average loss on the S&P and the NASDAQ, and that is why you're seeing those equity curves really pointing up from lower left to upper right here. You can see that's the S&P, that is the NASDAQ. Those are the 2 strongest of the group. So they're getting slightly better win rates than 50-50 and bigger wins and then losses. So historically speaking, this pattern's been a little bit bullish and favoring the long side. So hopefully you found that helpful. Good luck today, and we will